Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I've got one stock pick for you to look at for this week, and then my colleague, David Bartosiak, will have another one right after me. So let's get to my pick. So my top stock pick for the week is C3.ai, and this is kind of a hot stock of late. Friday had a more than 20% gain on the books there, as you can see from this nice little bounce up here. That was very nice. So it's a Zacks ranked 3. That's a hold with F's for growth and value. So not my normal thing that I would be taking a look at, but just want to focus in here. 18 million shares traded on average, and that's a very liquid name. So you're going to have lots of opportunity to be to look at this thing. But as we can see from the stock chart, 12 to 34 here throughout the course of this year, and I think that's all, of course, due to the wild craziness that is ChatGPT and how that thing kind of can write your essay for you if you're in school, or your sales pitch for you if you're not in school. So a lot of people have then said, let's at least try to have some AI exposure in our portfolio, and this stock really is the one of the best of breeds there. So it's getting a lot of attention. So earnings, let's look at the stuff we'd normally look at. So a beat, a good beat, and then a really big beat most recently. And the path to profitability is really that 6 cents of a loss there when we were looking for a 22-cent loss. So that has really encouraged investors here. Analysts also kind of like it, so they've moved up. The estimate's 10 cents there. They've gone the wrong way here, but big move higher the right way there. And then just a little move there, but still the idea is estimates are moving up. This should probably be a Zacks rank 2, but those decreases aren't that good. So surprisingly, only 5% top line growth for this year, but next year already looking at 20%, and we'll get more clarity into that number probably next quarter. If we take a quick look at the valuation, and that's one thing. So we got a bunch of NAs here, and an NA here on cash flow too, and an NA down here on inventory. So I'm not really worried about inventory. I don't like the revenue contraction. Not a great thing. And when the company's losing money, you're not going to have a PE to kind of look at. You're going to be looking at price to sales 14 times. That's expensive. Price to book at only 4 times. To me, that is a telling signal right there. Margins are going the wrong way. But again, that's gonna figure itself out here pretty soon. We saw them only lose 6 cents. So what's the real kick in the teeth here about this stock? I'm jumping over to a page called shortsqueeze.com. It doesn't say that I kind of got the rest of the stuff up there, but shortsqueeze.com is the site that I look at to see where my percentage of the float. So how many shares in the float are sold short? Here's my shares in the short float. Current shares short 24.8 million, and that's up from 23.6 the prior reading. So I can see that the shorts are pressing their bets. They've increased it by 5%, and that means fully 28.7% of the shares outstanding have been shorted. This is a crowded short, and boy, oh boy, feel the sting of the whip that these guys caught on Friday with a 20% move. Now, here's a look at the chart, and we're a little bit out here. So, this move has kind of been all at once here as we're coming back up. But you can see where the earnings estimates over the years, I mean, we've got big gaps there, this stock could easily run to 60 here, easily run to 60. And I would say that was that last level there before the big breakdown. I could see this stock being 60, no problem, in the next couple of months, or even less. The short squeeze is on. End of the month, end of the quarter, you're going to have investment managers looking to make sure that this name was on their book. And that's basically what happened on Friday. So Today is the day after the start of a new quarter. Whereas the stock, it's down a little bit here. I see it off about 2%. That's to be expected after a 21% move on Friday. But C3 AI is my stock pick for the week because I believe this thing is headed to the moon, so to speak. And I think you're going to see $60 as your next kind of way station to get you up to there. So look for that $60 right down there on that chart. Now let me kick this over to my friend and colleague David Bartosiak for his top stock pick of the week.
All right, well, thanks for that, Brian. It's Dave Bartosiak now, and my idea that I have may sound a little bit boring. It is Zacks rank number 1 strong buy. That should not be boring. Henry Schein, ticker HSIC, and they are in the dental business. Namely, they do a lot of installations and provide supplies and such for dentists, right? Not the most sexy thing in the world, but let's take a look at Zacks.com and see why I like them. So like I mentioned before, this is a Zacks rank number 1 strong buy. We have a B for value, a B for growth, an F in for momentum to help it round out with a VGM composite score of B. The medical dental supplies industry is in the top 12% of our Zacks industry rank. Not something you would think would happen, right? Not the sexiest thing in the world, like I said before, but let's take a look at the numbers. Revenue growth, not that huge this year, but this is a company that makes almost $13 billion a year. Next year, that's supposed to swell by 4%. But take a look at the EPS side of things. Here's where it gets interesting. Current year EPS growth, $5.32. That's 10% growth. Next year, that's supposed to be 7.71% growth as that number gets up to 573. But look at the evolution of these numbers recently. Over the last 60 days, you have 4 analysts up in the ante for next quarter, 9 for the current year, 6 for next year. That number for our Zacks consensus estimates for the current year has gone from 501, blipped down to 498, but then rocketed higher all the way back up to 532. Next year, similar story, 538 takes a step back to 536, but now look at us, 573 on the EPS side. Last thing I want to show you, you know I love my charts. And here we've got the interactive chart on Zacks.com, which you can always pop out and ends up coming from our partners at TradingView.com. Something I wanted to show is this consolidation period at the 200-day moving average. That is great. We saw that happen again in November, but this time that is where the buyers were camped out, sent the stock rocketing higher. Now we're at the 50-day moving average, which has provided some support in the past, a little bit of support here as well, but that broke. So if it used to be a floor, now perhaps it's a ceiling. I want to see a little bit of momentum here. If it can break out from this, then watch out, folks. We could be heading towards new highs. And there you have it. That's my top stock pick of the week. Henry Schein, ticker HSIC. For Brian Bolin and everybody else here at Zacks.com, I want to say thank you for checking out the video. But before you run away, check out Zacks.com/promo for this week's deal on our investor collection. Thank you so much for watching the video, and we'll catch you next week.